welcome to our end of October / election special. How are you?
Yes, I am doing just fine in spite of the awful weather, the
Yes.
drizzly, cold, rain stuff. I want summer back. Who took my summer away?
So it snowed yesterday. We're recording this
Yes.
on October 27th, 1 week out from the election. And yes, it snowed yesterday. My kids were really excited for the snow.
I wasn't.
I was not either. I did not know that was happening. I should probably pay attention to the weather more, but it is not summer anymore, Gary.
Yeah, I don't like that, but it's file that under something I can't do anything about.
Yeah, well, we're going to talk about a lot of those things today. So this is the election special, but before we jump into that, we're going to talk about the markets, as we always do, just kind of where things are, set the stage for what that looks like. But we'll spend most of our time answering some questions that I've been getting from clients in anticipation of next week, which is what do we need to do? And I'll just let you in on the secret. The answer is pretty much don't do anything. But we'll go through what that looks like here in a minute. So I'm going to share my my screen here for the markets as they are so far year to date. So we've pulled this up before. This is looking at some actual ETFs, some things you can invest in that going back to January 1st. So just to quickly run through what we have. The best performer so far this year is Vanguard Total Stock Market, which includes basically all the stocks in the U.S. Right below that at 5.26% year to date is the S&P 500. Then we've got bonds have made almost 5%. So you basically are at a point right now where stocks and bonds have earned basically the same, although if you look at the chart, it's very different paths to get there. Then we have emerging markets have really kicked it up in the last month and actually are positive now at 1%. And the laggard here is developed international down almost 8% still for the year, hasn't recovered from the bottom, which it actually had a further fall anyway with the pandemic. And that actually has been the case for a number of years now, where developed international has lagged the U.S. stock market. Gary, any thoughts? Anything you see here that jumps out to you?
Well, I suppose the bond line, it's doing what it's supposed to do. It's very steady. Very little except right there in the latter part of March when it got hit too, but otherwise, very low volatility. That's what you want with stocks, and a positive return. Mm-hmm. That's pretty darn close to the whole market.
Right, for sure. And to earn 5%, that's not just the interest, obviously, because there are no bonds that we would own that are paying 5% interest, but it's doing its job, which is to it's actually had some capital gains here with interest rates falling and protection. And so even with interest rates being as low as they are now, bonds still have a place in the portfolio. And this is a great example of why. And as we talk about looking ahead, as we talk about almost every time, we own a lot of different things because we can't predict the future. No one can. But we want to be well diversified and be able to rebalance and buy low and sell high and all that. So bonds play a great role and will continue to play a role as we move ahead. Anything else jump out to you?
No, I think that's the main thing.
Sounds good. So Gary, we definitely want to shift a little bit to the bulk of our conversation today is going to be about the election. It's a week away. We are not going to get political on our opinions, and that's actually not just because it's been talked about enough, but investing decisions really should have nothing to do with your political views, is kind of our general opinion. You should invest for the long run. You should invest for a lot of things other than just who's president, who's in Congress, and all that. Before we jump in to any of the specific questions, have any other thoughts on that?
Well, I guess the main thing is I voted this morning.
Oh, well, there you
So
go.
how about that? Yeah.
That's good. I mean, I did beat you. I voted a couple weeks ago with my mail-in ballot, but
Okay.
yours probably will be counted first. You dropped it off, right? So
Yes, I
that's
did,
good.
as a matter of
That's
fact.
good. So let's start with the big question. What should investors, what should our clients be doing in advance of the election?
Well, I'm in agreement with you. Absolutely nothing. It's simply, it doesn't make any sense to be trying to make a move, during the next, at the time we're recording this, 6 days before the election,
Hmm.
because we don't really know what for certain is going to happen. And of course, we have the other thing that nobody controls. What about the virus?
Hmm.
It's going to have an effect, but has nothing to do with the election or anything at all. And boy, if either of us knew how that was going to affect things over the next year or 15
Hmm.
months, boy, we wouldn't be sitting where we're sitting right now.
Right, right. For sure. Well, so let's put some numbers in, and I'm gonna show here in a second a chart on basically the last presidents and what returns have been during their presidential terms, what things have looked like, and it is categorized by party. The reason why we're doing that is just because a lot of people, depending on political views, will make different comments of, well, if this party wins, here's why it's really bad for stocks, or if this party wins, here's what they're going to do that's going to really boost the economy and therefore increase the stock market. As you said, there's a lot of other things, biggest one being the virus, that has a whole lot more impact on the market than just who's the president. There's a lot of other factors that go into play. So let me share my screen here um, for this chart, and this is actually put together by Dimensional Fund Advisors, DFA. We use a lot of their mutual funds, but they put this together, and this looks back to Nixon on from the start of their term to the end of their term. What is the annual return that you would earn, or that was actually earned by the S&P 500, which is a good measure of the overall stock market. And the numbers themselves don't matter all that much. It's not the point of sharing this. It's more on, there is almost nothing you can gain by saying, well, if this party's in control, then we know what's going to happen. The market's going to be positive or they're going to be negative. And you can just look at that from just take, George W. Bush, regardless of what you think about him, right as he started, tech bubble burst and had some recession there toward at the beginning of his term. Then, of course, you have the Great Recession. Whether he contributed to some of that or not isn't as big of a deal, as there was a lot of things that contributed to what happened in that lost decade of stocks when he was president. Whether that's party or not, that's not the point. When we look ahead, who knows what's going to happen? There's a lot more at play here. Anything else jump out to you other
Well,
than when I see all these pictures, they look a lot younger than when they leave office? That's for sure.
that's for sure. Well, I mean, I'll go back to Gerald Ford here, who was in office for what, less than 2.5 years.
Right.
Well, the market was up the most of any of these guys. Now, does that mean that Gerald Ford is the best president that we've had in the past 50 plus years? I'm sorry, but I will not make that case, and I would like to have somebody make that case for me. As you already said, there are so many external things that affect this, and you just can't say that one party is so much better than the other because of how it did during uh, the administration of anybody. And I'll just add to that that a specific president may get some legislation passed, but it may not come into effect until the next president comes around. So who gets credit or who gets the blame for that? You can't just say it all happens the minute that a new president comes in.
Right. Right. So it'd be crazy to say presidents have absolutely zero effect on the market, but we are not basing our investing decisions on some prediction of who's going to win.
Yeah.
What we are going to do is take a look at my next slide we have here, which is looking at the same data, actually going back to Coolidge. 1926 is about the beginning of the modern stock market, and so we have a lot of data going back there for the S&P 500. You can see this growth over time is a lot bigger deal than it is who's the president, what color is listed on here. This is what we're investing for. We don't know where the you're going to begin, if we're going to be higher after a term, but the Republican or Democrat president is not the biggest factor. The biggest factor is there a long-term growth in capitalism and owning shares of companies? We own broad stock market. You own every client that works with us has global stocks, U.S. stocks and international stocks, not sector specific. We own it all because we want to capture the overall growth of the world global economy. That's what you're invested in, and that's what you see here. A growth of $1. Notice this is a log scale. You've got $1 turned into almost 10,000 there since 1926. That's what we're investing for.
Yep. Not much more to say, I think.
You're just going to let me keep talking, aren't you?
Yep, that's right.
That's good. Well, so
I guess what I would just add to this here, because I do want to talk a little bit.
Okay, fine.
I think rather than just looking at the market and a broad generalization, I think the market is made up of a number of specific industries that can be affected by whoever gets elected, and that it can be different. I'll start off saying big tech. Big tech is under attack actually by both sides of the aisle. The Amazons, the Facebooks, and so on, with their market dominance. The Republicans actually have, either they have presented to the Senate or are working on it, some antitrust legislation. I think the Democrats, that'll probably be a bipartisan thing, no matter who gets elected. The energy sector of the market, I think there will be a big difference there, in that Trump supports the energy industry a lot more than what Biden does there. So I think there could be a real difference in the energy industry. Then you have other industries like travel, hotels, airlines, and so on. The biggest effect there comes from neither party. It's the virus. How long is the virus going to be around? And looks like we're going back into another bad time here, where we may be seeing hotels closing down again and so on. Well, that's got nothing to do with Biden or Trump. It's got everything to do with this horrible virus that is going to affect that, already is affecting it greatly.
Absolutely. Yeah, and we are not positioning client portfolios to bet on which sector is going to do well or not. As I said before, we've got, well diversified portfolios because even there's even some nuances within that within tech. Is every tech company being attacked? No, and that's not what you said. But there are things even within sectors. There'll be winners, there'll be losers. We don't always know which ones they are. Part of it's affected by Congress and by the president, but there's a lot more factors that are out there. So one thing that I've had clients ask questions about, specifically between the different plans, is some combination of, is there going to be stimulus that's going to be passed either before election? Doesn't look super promising right now, but afterwards, we know that that the amount of money that's been pushed into the economy really since 2008 has definitely played a role in the stock market doing well. So will that continue? And on the flip side, other side of that is how do we pay for it, which a lot of people are concerned about taxes increasing, especially if Biden wins. But let's talk first about that first one. At least what I'm seeing, what I'm reading is both candidates have quite a bit of money they would be spending if they win, maybe different ways, put in different sectors. But neither party is saying we're going to shut off the dollar faucet. Um, any other thoughts on the stimulus side of things?
I think I agree with what you've said. I think we're going to continue with really large deficits for probably several years. And how are we going to deal with the consequences of that is a big question that, boy, I don't have the answer to.
Right. So on the tax side, which is one way you deal with the deficit potentially, and we're not going to get into that the right way or not, but it is so Joe Biden does have a tax plan. It's out there. It is the information on who it affects. And so I've had a lot of clients say, well, I've heard a lot of different things about this tax plan. What does that actually look like? So there's a lot more that has been proposed on the corporate side than on the individual side. So small business owners and large corporations both would expect higher corporate rates under his plan, but it wouldn't go all the way back to what it was prior to the Trump tax cuts. So it would not go up to the 35% that Obama had. It is proposed to be about halfway, so from 21% to 28%. What does that mean for an investor? It could be good, could be bad. So generally, we don't like taxes because that, as a corporation, because you got to pay more taxes, that's less money to reinvest or to give to shareholders. At the same time, it's never been planned that I don't think the market's ever planned that tax rates were never going to change in the future. So just because Biden wins doesn't necessarily mean you've got this big crash in earnings, post-tax earnings for a lot of corporations, and that the stock market's going to take a big fall. But on the individual side, which is really what matters to most clients more so than anything, the top tax rate would go up. The people earning over $400,000 a year would pay more in Social Security taxes, and there'd be some other tax hits for those that have incomes 400,000 plus. Is the main people that in the immediate future would get hit by tax changes within Biden's plan. There isn't much at all that would affect directly individuals below that threshold. There are some other changes that would affect on the state taxes, but that all comes into play upon death. Part of that has to do with who's in Congress as well and how that sets up. But for most individuals day to day, it's not going to really have much of an effect on individual taxes at the moment based on the actual plans that are out there. So Gary, is that what you've been seeing? Is that what you think?
Yeah, I think so. I really don't have much to add in that area, but yeah, that's what I'm reading and hearing.
One thing that I forgot to mention, which is, I know I talked to a few clients earlier in the year before Biden even released the full tax plan, which there was talk that capital gains and dividends would be taxed at ordinary rates, not at more favorable rates as they are right now. Right now, if you have long-term capital gains, you pay 15% or 20%, not normal income rates.
Plus the state tax.
Plus, state of Illinois does, of course, tax that piece. But in Biden's plan, those that have over $1 million of income, it would be taxed at ordinary rates. But for everybody else, it would still stay favorable rates as they are. And there was some concern, I know earlier in the year, some clients expressed some concern of, am I going to have to, pay a bunch of taxes when I sell things that I've made money on? at a much higher rate should we do anything. Now, the current plan that's out there looks like that would only apply to those with earnings over $1 million a year. So it should be fine on that front as well. But as we do with all of our clients that work with us on all the financial planning, we're doing tax projections here. As I've told clients, we're waiting until after the election. Just we'll know a little bit of information on strategies and things that we need to do. If there could be some changes, but as we always do, we want to see, make sure we paid enough in for 2020. We know what all of the changes that have happened with the CARES Act and other things related to the pandemic and some other regulations that have come out. We're doing that for all of our clients here before the end of the year anyway, so there'll be plenty of time to take any strategies we need to do. There's nothing that clients need to be doing tax-wise before the election next week on that front. So Gary, what else do you want to add about the election? What else should people be thinking about?
Well, I guess I've seen some things about what's going to happen between Election Day and the day of the inauguration. And will the Republicans or either party be trying to push something through during that time period? The only thing I really see is that maybe there'll be some agreement on a stimulus bill to help out people that are unemployed, probably most of which through no fault of their own or no fault of their employer. And I think practically everybody is in agreement that something needs to be done there. But right before the election, politics takes over everything and nothing is going to happen. But, during this lame duck period, I think probably the biggest factor there is the virus, because that's going to have a real impact on the economy. We're now starting to shut down. It's getting worse. Boy, how bad is it going to get? Mm-hmm. And that's going to have a bigger effect on whether the economy continues to grow out of the low point in March, or we go back into another economic contraction if it gets so bad. And neither party controls that.
Right.
So other than the stimulus, I don't see much happening before Inauguration Day.
Yeah, as I mentioned to you before we started recording, for our son who's in first grade, he was in school for 1 week, and then this week is his last week. Today is actually the last day, and it's gotten so bad so fast virus-wise in the area we live that they've gone back to e-learning, and I think we're one of the earlier schools in Illinois to do that, but I don't think we'll be the last one to go that direction given the way the statistics are going. So that's definitely a factor. And of course, we could have some market turmoil. You could also have some opportunities to rebalance, and we will take advantage of those because we are long-term investors. I wanted to touch on something there as well, just to throw out a few numbers, because I think there's a lot of concern, and it's all related to all this, which is, when should we invest? If we've got some cash on the sidelines, when do you put money in? Now, clients, we're pretty much fully invested and we've got money as they need to be and we rebalance, but maybe that's a question. If we're close to a high, do we wait for it to drop? Or if things start to fall, do we need to wait a little bit longer and not invest? So we pulled out some numbers based on if you invested at all-time highs. So when you hit an all-time high, which happens actually pretty regularly in a bull market, that a new high is announced that you hit that number. If you were to just invest at highs, and this is using basically a broad stock market index, when you look out over 1 year, historically, you'll make another 13.3%. And if you look over 5 years, you'll make just under 9% a year. Well, we expect stocks to make 8, 9, 10, 11% per year. So you're right in line. If you just invested at all-time highs, that's not a time to say, oh, well, it's high, so it's got to go down. You've actually done pretty well. On the flip side, if you were to invest just when it was down 20% off those highs, over 1 year, you'd earn 14%. Over 5 years, about 12%. So it's better. I'd rather buy in, but I don't care which of those numbers. I want to earn 9% a year for 5 years if you're invested in stocks. I want to earn 12% a year for 5 years if you're buying in 20% off the high. Waiting to try to time the market because you think it's high or you think it's low, um, you're just missing out on the returns in the long run. Long term, we want to invest and stay invested, not try to time whether it's anticipation of the pandemic getting worse, whether it's saying, this president who I don't want to be president is going to be president, all of those things. None of those should really factor into, should I have stocks in my portfolio? It's what's the right allocation, how much risk can you take, and what do you need to reach your goals? And you've preached that since I've known you, Gary, of take as much risk as you need, and that's why you're invested.
Yeah, and don't take more risk than what you need to either.
Exactly.
Because I think that's where Illuminate adds the greatest value is risk management. It's not because you're picking a hot stock or a hot mutual fund.
Mm-hmm.
You just can't do that consistently, but you sure can manage risk consistently. Mm-hmm. And that's the idea.
Sounds good. Anything else you want to add?
I guess the only thing else that I will add is whoever gets elected the next week, I think the next year is going to be interesting politically as well as economically as well as virus war wise. But I think one of the things that is interesting politically is neither party is really united in terms of what they want to do. Now, the Democrats right now are completely united in wanting to defeat Trump and get control of the Senate. But whatever happens in the election, the Democrats have a wing of the party, the Alexandra Ocasio Cortezes, and the people that I guess I would describe as being very progressive, Green New Deal right away, right now. And the Democrats that I would consider to be more of the traditional Democrats, very big, favorable towards working class people and so on. They don't agree on a whole lot. And even let's assume that Biden wins and even assume that they take over the Senate, they aren't all pulling in the same direction. And I think that's going to be very, very interesting. On the Republican side, you have the same sort of thing. Whether Trump wins and the Republicans keep control of the Senate, you still have the same type of a split where you have the super conservative right-wing Republicans and where you have a considerable number of what I would call the more traditional Republicans. And there's going to be fights there. There already are. Not all of them are making the nightly news, but if you saw what was going on behind the scenes and in the conference rooms, you would probably hear a lot of yelling going on and some real disagreements within the Republican Party. So with the new president, I think that's going to be really interesting to see how that all shakes out and which wing of both parties winds up being more dominant, or whether neither side does and they just kind of fight among themselves.
Absolutely. There's a lot of different paths that we could go down, and you and I are not in the prediction business. We're not here to say this is for sure the path and this is what we need to do. as investors, we're invested for the long run. But I think that's a really good point about the politics, and it's not just two sides. There's a lot more factors at play here. I'm going to leave you with this. I was reminded of this analogy recently, and I've heard it before, but I think it really fits now, especially as we think about moving ahead and we're in volatile times. You can imagine that the stock market, invest in the stock market, is like walking up the stairs with a yo-yo. So the yo-yo being the stock market that's going up and it's going down. But over the long run, we are moving up in the positive direction. And it's not always in a straight line, but overall, the general direction is what we're trying to invest for. And that's what we want to keep in mind during turbulent times when it's easy to be fearful of things looking ahead.
Yeah. Well, I'd like that story. That's a good way to say it.
Sounds good. Well, I can't take credit for it, but I thought I'd pass it along. So,
Okay.
Any other final thoughts you want to leave us with?
No, I think that's about it. I just want the snow to go away.
Well, it's melted here. I don't know what it is there, but
Well, it's melted, but unfortunately, more is coming this winter.
Yes. Well, hopefully not on Halloween. I know my kids will be really disappointed if for the second year in a row we have a blizzard. Last year was very cold and had a foot of snow or something, but this year we should be good. So you getting out there? You're going to do any trick-or-treating, Gary?
Well, our grandkids are coming to our house, but they're because of the virus.
Yep.
They aren't going to be doing any trick-or-treating up and down the street, but Shelley and I have got some games that we've got that we can play and so on. So they're going to have a good time, even if they don't go out and get a whole bunch of candy.
Yeah. I think in our neighborhood, the way they set it up is they've individually wrapped candy. We don't have a lot of kids in our neighborhood, so they're going to leave it out on the front step, and kids will go around all the houses and grab their individually wrapped, thing. But I'm dressing up this year, Gary. We always do in this house.
Oh, okay. Well, who are you going to be?
So I always pair. We got two kids. So my wife is paired with one kid, and I'm with the other. So this year I'm with Charlotte. She is going to be a witch. So I am dressing up as a broomstick, and she will ride on my shoulders. So I can be the flying broomstick. But Henry is a stormtrooper from Star Wars, and I don't remember who Kristen is, but something Star Wars related. So we'll see how that all works out. But coming up, we got the Halloween, we got elections, we got snow coming, and things shutting down here in Illinois again for the virus. So a lot of things out there, but we'll stay invested and we'll do this.
We'll get through it.
That's right.
We will get through it.
Sounds good. Well, thanks for joining us on this investment review election special.